What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is June 3rd, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we are going to talk about the price action in the indices. Much different day. We were having a really bullish sequence. Today was the first day of significant weakness in about 2 weeks. We're going to go under the hood and we'll check out our sectors and style factors. We'll talk about some of my trades for the day, and then we'll wrap up some options order flow. Before we go into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades. All right, so let's jump into it. And let me pull this aside, close this out. And okay, let's pull up our S&P 500. So box scores for today, we had the S&P 500 as measured by the SPY, closed down 0.37%. We had the Nasdaq QQQ finish down 1.04%. We had the IWM small caps finish down 0.84%. And we had the Dow Jones close down 0.1%. So I talked about this yesterday in the recap video where, hey, it's been a really nice bullish sequence. You know, we're seeing all these crazy things like AMC and all these short squeeze stocks, going wild to the upside. And I started talking about how, it's important to be, just grounded when you're having that really bullish sequence, because, at a certain point in every bullish sequence, you end up getting that weakness that comes into the market. It is really important when your portfolio is riding high to think about what you're going to do when that window of weakness appears. So I was sort of in that mindset from yesterday. For some reason, it was at the top of my mind, like, what am I going to do when the market weakens, that sort of thing. So for today, I woke up, saw the market was gapping down, saw there were some bad headlines hitting the tape. And for me, I was pretty much like in gear, ready to go. So we had S&P 500, you can see this chart right here. We had a big pullback in the morning. And you can see we pulled back below this monthly point of control and also below this 20-day simple moving average. We did find buyers early on in the morning that came in to support the market. And you can see where we ended up is pretty much right back in this chop zone. If we look at the hourly chart, you can see I created this, essentially like a line in the sand level here. It's at around 41.77. And what I wanted to do was, okay, last week we kept hitting this level and we found support here. So I set that same level up again and just made a marker and said, if we end up closing below this, I'm going to be completely out of my risk. We ended up holding that 41.70 level. And you can see we found our way back into this weekly value area. But what you'll see is we struggled at this weekly point of control here at around 41.97, and we could not reclaim that. We ended up falling back over. So in terms of where this market wants to go and where the trend is, now things are much more ambiguous. And for that reason, for me, it made a lot of sense to pare back risk here. You'll hear a lot of people talk about like, oh, I let the price action tell me what to do. But then once the price action changes, they just don't change a thing, or they get the deer in headlights, or they don't want to feel like they're wrong, so they want to stick with all their positions. And that's really what separates, professional trading from, just somebody that's investing or trading as a hobby, or somebody that really hasn't gotten the hang of this yet. So if we look, S&P 500 looks very ambiguous here. To be quite honest, this could certainly break to the upside or the downside. So yesterday after the market closed, we found out the Fed is going to be winding down their corporate credit facility. Corporate credit facility, it's not like it's really needed as of this time, but it shows, okay, the Fed is really actually beginning to taper. So as much as they're saying like, now we're starting to thinking about it, that is tapering if they're going to sell a bunch of corporate bonds in the open market. So we had that. Then we also had overnight Russia. They are pretty much getting rid of all their US dollar denominated assets. That is another bad thing. Then we found out hedge funds are racking up losses due to AMC and a lot of these other meme stocks that are short squeezing. So what you can see is we have this like cocktail of all these negative headlines hitting the tape at once. And when that happens, it's important to be flexible and just be open to upside and downside. Let's pull up our NQ. So that's typically whenever we get like a corrective sequence in the market, that's usually how it starts, where it's like, oh my gosh, a couple bad things, but who cares? Like, I'm staying long. And then some more bad things start hitting and the price action gets a little bit worse. And then people panic and capitulate at the lows. Nasdaq was down 1.05%. You can see we closed below this monthly point of control. So I had really high hopes for the Nasdaq and for the S&P 500 as well, where, okay, we had a nice move higher. Now we're getting a consolidation. And really the happy path for me was you consolidate here and then you make your move higher. We could see from 2 days ago, we tried to make that move higher and we failed. Yesterday, a nice little green candle, but today the dam burst. And we did hold this 20-day simple moving average, which is good. But you can see, we're in value now. And that's not really when it's like, okay, time to get super bullish. It's when you want to be a little bit more neutral, a little bit more defensive, that sort of thing. And then if we pull up the hourly chart for our NQ, you can see we're below this weekly value area. And then we'll pull up the Russell. Russell down 0.81%, also off the lows. And you can see we're holding above this monthly value area here. So IWM still looks pretty good here, but we do have, this red candle. We were down 0.81%. And the Dow Jones is looking the best here. The YM only finished down 0.03%. You can see we really put in essentially a doji candle. And the Dow Jones is still consolidating here. So let's jump into, we're going to pull up our heat map. We'll pull up our market breadth. So market breadth was negative today. This is another thing where, when you're just making your mental checklist of what do market conditions look like, you can see it wasn't horrible. This morning when the market opened up, I think there were only like 60 advancers in the S&P 500. At one point in the day, breadth turned positive for almost all these indices. So it's like, okay, maybe we're just getting this weakness and then it'll clear up. So I would say today was definitely ambiguous for sure. Because it looked at one point like, oh my gosh, we're about to flip green on the market. So definitely an interesting day. And you can see breadth negative in every index except the Dow Jones. Now looking at our heat map. So this is another reason why I got a little bit more defensive today. When you look at the heat map, it's tough for the overall market to make progress when you have all these FANG stocks that are weak. The only real, big liquid leader that was strong today was NVIDIA. And NVIDIA, this is a name that I traded a couple days ago. NVIDIA here, did not close on the highs. NVIDIA has had a really nice run, but this is, day 1, 2, 3. This is day 4 of the run. And you can see we're extended from this 5-day EMA. So NVIDIA cannot do this all by itself. And that also got me thinking, hey, what happens if NVIDIA is red tomorrow? What's really going to support the market? And when we look at some of these other stocks, you can look at Apple. Apple just broke below the 200-day moving average and below this monthly value area. So that's not confidence inspiring. And if we look at Amazon, this one looks like it held at the bottom of value here, but yeah, closed below the 200-day. Out of these names, Facebook and Google by far look the best. You can see Facebook had a nice pullback to this monthly value area high and put in a doji candle. And then Google, which I actually took a call spread here. Google also, you can see now trading in value, and it actually put in a green candle. So buyers came in and supported Google, closed down 0.69%. But yeah, overall, this is not a good configuration in terms of, oh yeah, we're going to rip to new highs. You know, it's just really not. And then the other name, and this is another potential canary in the coal mine here. This is why, like, in a way it's frustrating because, you know, I want the market to just keep going higher just as much as anybody. When you see these things, you know, you do have to pay attention to them and you do have to act on them. So Tesla, and this is one, at one point today it looked really good. It was about to flip green. I actually tried a lotto call spread on Tesla. And Tesla, a headline came out that during the month of May, their China sales dropped by 50%. So Tesla, you know, when you zoom out on this thing, it's been a horrible stock throughout 2021 in a really poor trend. And then you can see here, you know, we had the botched purchase of Bitcoin where he started talking down his purchase and ended up crashing the market. And then you have, you know, sales dropping in China by half. This is, you know, it's just not really a good story. And it's not really, you know, it's just not bullish no matter which way you spin it. So Tesla also closed below the 200-day moving average. And you can see we're below this monthly point of control. I actually closed out my call spread that I put on, you know, intraday for a loss because I saw that headline came out and I was like, okay, this thing's not going to work. And I actually ended up opening up a put spread for July. But yeah, Tesla, you know, I guess anything can happen, certainly. But if this name breaks to a new low here, you know, that's another headwind for the market. And it's a headwind for the Qs especially. And looking at the weekly chart, so Tesla, you can see this is like a descending triangle pattern forming. You can see this weekly candle. Look how it looks at the moment. Looks pretty dire. And then you can see this is the yearly value area high here at 491.96. So could Tesla go ahead and tag this yearly value area high? That certainly seems within the realm of possibility, and I actually think it is going to happen most likely. I think the last bit of news from Tesla on the positive side is they're trying to open up a restaurant or something like that. I don't know. Yeah, it doesn't make any sense anymore. So this stock definitely, you know, it's another canary in the coal mine. And Tesla is, you know, directly correlated to this ARK fund. So this ARK fund, you can see this one's also right at the yearly value area high. Tesla's the largest holding in it. So ARK, this looks a bit more healthy. It's pulling back to the 20-day. But if Tesla ends up being that canary in the coal mine, you know, that's not going to be good for ARK either. And then it's going to impact the other holdings that are in the ARK fund. So yeah, just a lot of ambiguity here. And then let's pull up. There were a lot of stronger areas of the market, so we'll highlight those as well. So in terms of our sectors, you can see a lot of these sectors really just got beat up today. Anything that was, you know, in the momentum basket, anything growth related was down, you know, well over 1%. You can see there were some bright spots. This global autos ETF was up 0.37%. You can see consumer staples were up, utilities, healthcare. And those are typically not the areas that you want to see shining in the market. In terms of style factors, you can see we had the growth style factor down 0.84%. We had international momentum down 0.75%. We had cyclicals down 0.83%. We also had high beta down big as well. So yeah, pretty much there were no areas of the market that were left unscathed other than high div, low vol, and defensives. And that's, you know, not a risk on configuration for the market. Let's pull up some of my trades for today. And really what I talked about with Pristine Capital members in the pre-market was just, hey, I'm going to be de-risking myself today. I'm going to be taking stops. And, you know, this has been a really nice sequence. So my job today is to get myself out of harm's way and just make sure, you know, I'm holding on to these gains. So let's see. Yeah, so I have a lot of trading activity today. Let me pull this up. I'm just taking a screenshot of it over here. Okay. Yeah. So yeah, you'll see like a lot of these were just me closing out positions, stopping out. So I had some GDX calls that I put on the other day. GDX looked like it was setting up a really nice pattern here. And this was another, canary in the coal mine. Like, we open up for trading today, and immediately I see a headline like gold falls 3%, silver down 3%. Like, all these different assets, really just fell off a cliff. So the gold miners, really what I was playing for was, hey, we're consolidating here. We're going to break out to new highs. And you can see these gold miners, now they're below the 20-day. This pattern could certainly come back, but the initial reason for which I was in the trade was invalidated. So I'm not going to stick with that trade, especially when I need to be more defensive. So that's the important thing in terms of trading and in terms of doing it, on a professional level. You can't get stubborn and be like, well, I don't want to admit that I was wrong on gold miners. So you just kind of have to be like very unemotional about it and just be like, okay, cutting this, cutting this, cutting this. That way, if the market continues to be negative, then you're like, all right, I'm already back to safety. So closed out gold miners. I actually added to my Twitter position. So I added to some January 2022 calls. Twitter was one of the stronger names in the market today. You can see this one put in a doji candle. There was the announcement of the Twitter subscription service being rolled out. This one didn't have the strength to close positive. But yeah, just put in a doji candle today. And I like this one for some higher levels. So I added that. Google, I added a call spread for June 11th. And then what else do we have? I closed out my Airbnb October calls, and I'm glad. So for Airbnb, I was closing out that position, into strength. And the Airbnb October calls, that was my last piece that I had on. I closed out coin. I had, for Coinbase, a call spread, closed that one out for a small winner, closed out ConAgra for a small loser. Really what I was doing was just, getting myself cleaned up, getting everything in order. This PDD, I had some June 18th 140 strike calls. Those, they just did not work. So Asian equities also, they also took a huge hit. And with this FXI ETF, I have some 2022 options on this thing, but this has historically been the pattern for the past couple of months where this thing will have a really nice move to the upside and then just horrendous gap lower, like explosion lower, just on a risk-off move. And I can usually tell when you get those explosive gap moves lower, like Asian equities, explosive gap, gold, explosive gap, like all of these, like that for me is always a sign of, whether or not the market goes up the following day. That to me is just always, okay, now I need to be more conscious of what I'm doing and make sure my risk is in line. Because a lot of times that can precede, further weakness. So yeah, PDD was one of those names. This one tried for some short-term calls. And this one, PDD held support here. But yeah, this setup, just didn't quite work out. And in the spirit of de-risking, I was like, what, I'm just going to take this exposure off. Yeah, so at this point, I feel much more comfortable with how I'm positioned, given the way the price action is unfolding. So let's see, and then I'll pull up some stock trades as well. And this was more of the same here. Yeah, so you can see here I took a stop on Upstart. This one was at 934. This one ended up making a pretty good move later in the day, but I closed this one out for essentially a scratch 4-cent winner. I closed out, I had some forward covered calls. I closed those out for $14.50. I paid $13.01. I closed out the remaining half of my applied materials for a nice winner, about a $15 winner there. I closed out more of my Roblox common shares at $98.95. I paid $73.91. I put here down to 55% of my original size. That was a very overweight position of mine. So yeah, I figured, hey, I'll just take some of the weight out of it because, at some point Roblox is going to have a nice little corrective sequence. And it looks like that already started. Yeah, so I closed out at about 98.50, so somewhere around here. And then, yeah, this thing ended up, closing on the lows today. So who knows? We're still very extended from this 20-day simple moving average. I want to be in a position where, if we end up tagging that level again, I could theoretically add to my position. I won't be, stopping out of it. And then Overstock closed this one out for a decent sized winner. Closed out for 90.99. I'd paid 87.72. And then gold miners, I had a small starter position in common stock. Closed this one out for a small loser. And I said the reason for which I entered this was invalidated. So yeah, today was a lot of cleanup and just getting myself positioned for a potentially a rockier market. And who knows, we have options expiration in 2 weeks. Maybe we just, gap up tomorrow and, the market's just back to normal. I would actually prefer that. I certainly don't want the market to get really choppy and more downside, but I just want to be in a position where, all right, I took my hit at the end of this little active sequence, and now I'm in a good position. I'm not, freaking out or anything like that. So let's see. Let's pull up our options order flow really quick. And so for options order flow, we did have a lot of put buyers, which is good. So we had, yeah, they kept going for AMC. Take a look at this. So I saw an article earlier today and it was like, oh my gosh, these hedge funds are getting decimated on AMC. And luckily, yeah, AMC closed down about 18%. So hopefully some of that pressure was alleviated from those hedge funds. That could be a good thing. At one point, this thing put in like a red to green move, and I was like, oh gosh, is this thing about to just moon and then the whole market gets taken down? Yeah, it looks like the move here might be close to an end. And then what else do we have? You can see, yeah, more SPX hedges. You can see some Facebook hedges coming down. And some General Motors activity. General Motors put in a nice move today. Yeah, really nice. This one held the breakout. This one's definitely going to be on my watch list moving forward because this one, really nice volume on this move. And it was not disturbed by some of the other areas of the market that were much more turbulent. So yeah, GM looking pretty solid there. And then, yeah, you can see there was a SoFi call buyer. We had some Tesla call buyers as well, buying calls on the dip. Then you can see Microsoft out for 2022. Let's see Microsoft. I don't think I looked at that one earlier. Yeah, Microsoft looks decent again. So this one put in essentially a doji candle. So it looks like buyers did come in to support it. Yeah, you can see held the monthly value area low. So that one definitely looks better than Apple and Amazon, in my opinion. With that being said, that about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all tomorrow.